Eamon Javers, thank you. Turning now to the markets. A strong week for stocks, for small caps in particular. Finally, the Russell 2000 hitting a new record high yesterday. Everything kind of getting a boost after the Federal Reserve cut interest rates by a quarter point on Wednesday. Earnings remain strong. There's a lot of talk about a Goldilocks potential for the economy. Let's talk about all of it now with Scott Chronert of Citigroup. Scott, good to have you back on the program. What sort of is the playbook now? What are you recommending to clients?
Hey, Brian, great to be on, and I'm glad we're in the middle of football season and can talk playbooks here. So I think the way we're talking about it is we've come charging down the field. We're probably first in goal, and we're calling a timeout here. We just need to catch our breath, make sure we got our playbook in place here as we go further down this Fed rate path, look ahead to the Q3 earnings setup, and then think about how we're going to get into the end zone. Bottom line here, our view all year has been we want to be barbell between growth as our leading call with a cyclical bias. Now, as you go further down the Fed easing path, the cyclical bias begins to take on a different perspective. In this soft landing Goldilocks scenario, that's where you can begin to go down cap into small mid cap on the premise that you're going to get more of an earnings recovery into 2026 as we get a little bit more Fed stimulus relative to the past 2 years of, let's call it, earnings recession that SMID's been living in.
Are all the earnings just coming from the AI-related companies or the companies that we don't talk a lot about, the ones that finally hit a new record high as an index yesterday? Are they also seeing earnings growth?
Well, it's a good question, and the answer is yes, you're starting to see the broadening. We saw some evidence of it in Q2. We think we'll see more in Q3. We probably have to fine-tune around tariffs and other policy initiatives on this. But the way we think about the S&P 500, the capitalization right now is roughly half attributable to AI-related. The other half is going to be everything else that's going to have a combination of economic sensitive and defensive. It's the AI-related stuff, whereas we've surged the NASDAQ off the April lows. You've really begun to price in a fairly strong earnings growth dynamic, not just for this year, but in forward years. So what this does is it puts pressure on that part of the market for beat and raise. At the same time, the other half that's going to have more economic sensitivity to it is still kind of working its way through how to think about the labor condition, the rate condition, underlying economic trajectory. So our point here is that we've run expectations pretty high. We think it's going to be a pretty high bar for Q3 earnings to really deliver on. That said, pullbacks we want to be aggressively buying into for what we think will be a very strong finish to the year.
Well, we've hit your target for the year, correct, Scott?
Yep.
So you do have a Super Bowl case. We hit 6,600. You do have a Super Bowl case of 7,200. What's it going to take to get there? And please don't say like another 500 points.
Well, what it's going to take is coming back to this earlier comment. So right now, we're predicating our year-end view for this year on what we think 2026 earnings are going to look like. We're already ahead of consensus with a $308 earnings estimate for the S&P. So essentially where this needs to go, we need to see the path towards earnings estimates for 2026 go even higher than where we are currently. And that's where you begin to go down this argument of, okay, are we going to get a traditional stimulative effect out of the Fed, or is it already being priced in? And that's really where the edge is going to be. So now we're talking about 6,600 is more or less what we think of as fair value for the index. Again, sentiment can always take things higher and sometimes lower. So we're open here. The bottom line is we think structurally the S&P 500 and its fundamental backdrop is in really good shape. It's just a question of how this playbook unfolds in terms of the next couple of plays versus how you get to the end of the game.
Yeah, well said. And we'll see if we get some earnings raises at the next go-around for corporate earnings. But we're going to just enjoy the weekend ahead of that. Scott Chronert of Citi. Scott, really appreciate it. Thank you.